let's talk a little bit about some of these earnings reports that came out last week. We have the two big payments providers there in Visa and MasterCard reported middle of last week, and very similar reports, Matt. The market seemed to receive them kind of the same way as well. I mean, it wasn't a great week for either stock, and they've done a good job treading water here this year, given everything that's been going on. But I think in at least my perspective, and looking through these reports and going through the calls, it seemed like there was plenty of optimism in there. And so let's go ahead and start with Visa at least, and talk about how they're viewing things here. The quarter itself, top line revenue was down. It looked like about 17%, felt a little bit more than $5.1 billion in net revenue there, down a little bit for some obvious reasons. But it was interesting to me, the language they've used in the call when they talk about this U-shape versus V-shape recovery and whatnot. And they're seeing this playing out a little bit differently, whether it's domestic or whether it's cross-border, right? They've talked about seeing more of a V-shaped recovery for domestic payment volumes. But when we get into the cross-border market, where these companies are making lots of investments, they're still really witnessing more of an L-shaped recovery. And that has to do for, obviously borders that are being locked down now, and there's just less travel going on. But what stood out to you in the quarter for Visa?
Well, you actually just hinted at one of the big things that stood out is cross-border payments. You mentioned revenue down. Revenue fell 17% year over year. But interestingly enough, total payment volume for the quarter rose by 4% in Visa's network.
Yeah.
So it may sound kind of weird, like, don't they make their percentage of transactions and that's where they get their money? Which, yes, that's the case. But the biggest fees come from cross-border transfers. If you have a credit card, it probably charges a foreign transaction fee, for example.
Yeah.
So this is one way that they make their money, and those, in Visa's case, excluding money transfers that just happen within European countries, excluding that, cross-border transfers were down 41% year over year.
Wow.
Not surprising, because there's no cross-border movement going on.
Yeah.
I mean, no one's crossing borders. So there are fewer reasons to send money across borders. So that's the big trend that really stood out to me. That's why revenue was down. Worth pointing out, Visa is still very profitable. Earnings were down 23%, but another way to say that is they're still making more than 3/4 of their previous profit. So take it with a big grain of salt.
Yeah, I think so.
The other big thing that stood out is the mix of payment volume. I mentioned Visa's payment volume was up 4% year over year. Debit card payment volumes were up 20% year over year. Credit card payment volumes were down 10% year over year. Mm-hmm. So people are more hesitant to put money on their credit cards, it seems, as opposed to debit cards. The debit cards have much lower interchange fees. It's worth pointing out.
Yeah, and I mean that debit versus credit. I mean, obviously that's a function of one essentially being pulled directly out of an account versus another where you're not necessarily paying for it all at once. Let's talk for a minute about Visa's acquisition strategy, because there are a couple of things that stood out here to me, and I wanted to get your take on both of them here. One, we're seeing that Visa is acquiring this company called Yellow Pepper. And it's a company that they've partnered with for a while now. So the acquisition, I mean, you typically don't get lots of information regarding the terms of the deal and whatnot. So this could be just another little sort of bolt-on acquisition, perhaps. But I think the bigger one really is the status of the Plaid deal. We've talked a little bit about this Plaid acquisition. It seems like at least that the DOJ is giving it a closer look.
Yeah, and this is to be expected. Right now, we're seeing M&A activity heat up all over the financial services space. We've talked about this. A lot of it's the function of consumers want lower fees. The big gradual trend is towards zero fees. And that's one big reason you're seeing so much consolidation. We've talked about this in the context of the brokerage business, where commissions have gone away. The way you make your money is to be more efficient than the other guy. And the way you get more efficient is to acquire things.
Yep.
In the credit card space with Visa, you're seeing a lot of acquisitions intended to prevent them from being disrupted, I guess you'd say, which is, I think, where the Plaid thing comes in, and especially the Yellow Pepper, which we'll talk about in just a second. But in terms of the Plaid acquisition, it's when you have something like this, you're always going to see the DOJ investigate when you have a deal of this size that could could potentially be a needle mover. I mean, the fact that they're investigating it really kind of shows you the value that this could add to Visa's business, in my opinion.
Yeah, and it strikes me too that this, at least the Plaid acquisition, doesn't seem like an acquisition that is based on eliminating a potential competitor, right? I think in looking back at Facebook and Instagram, it's become clear, based essentially on language that was used at the time when the deal was presented, that Facebook was looking at that acquisition as really kind of eliminating a potential competitor. It was partly about making Facebook a stronger business, but it was also very much in part eliminating a potential competitor there. And so in hindsight, they probably should have kept that under the microscope more. I don't think that's really what's going on with the Plaid deal, but it has the potential to certainly make it a much stronger business. And I don't know, what were your thoughts on the Yellow Pepper acquisition? That's a big presence in Latin America, isn't it?
I mean, that's an obvious move to kind of increase the international presence. The big growth potential for both Visa and MasterCard is internationally.
Yeah.
We're used to both of them being almost universally accepted in the U.S., especially in the past few years. Ever since companies like Square and PayPal made credit card acceptance so easy, it's pretty much universal here. That's not the case in a lot of markets, especially Latin America. So it's not surprising to see Visa kind of invest a lot of money to get in, to more of the inner workings of the fintech markets in Latin America. I like the deal. I want to see the price. I'm pretty sure that one was an undisclosed price, or at least I couldn't find one.
Yeah, that's
so I'd like to. These acquisitions are going for a lot more money than I would have thought. Like, I would never have thought PayPal was going to pay, almost $4 billion for Honey or whatever it was.
Yeah.
Or that Visa was going to pay $5.3 billion for Plaid. So I want to see what the deal is, what the price of the deal is before I, say whether it's a good move or not.
Sign off on it.
Because sometimes in this market, I feel like I'm the only person in the world who still thinks that price matters. Well,
you're not the only person that feels that way. I definitely feel that way. To me, listen, price always matters, and that's one of my. I don't think I'll ever get past that. Now, I mean, there are different ways to view that, and certainly valuation. It is something that you want to look at in relation to the company's growth prospects, but I absolutely do believe that price matters, and it does feel like right now nobody out there really cares about it.
And here's the $1 million question: like, is Plaid worth $5.3 billion as a standalone business? Absolutely not. The question is, will it add that much value or more to Visa's business?
Yeah, well, and that's it. I mean, Visa's got something like I don't know what, 4 billion cards out there now or something. So I mean, you're plugging it into obviously the biggest payments network, and that is something that they can factor in. That price becomes a little bit more justifiable, I think, to them at least, because they're viewing it from the size of the network. But regardless, it is a matter of you still got to do something with it.
And if you remember when the Plaid deal was announced, Visa stock went down.
Yeah,
and my big theory on why is because of the price of the deal, not necessarily because of the deal itself. It's because they're spending, over $5 billion of their capital in as opposed to putting it to use with, buybacks or dividends or something like that.
Yeah.
So that's a big chunk of change for and it's really unclear what Visa is going to do with Plaid.